journey begins with a single question: how did a handful of empires, dynasties, and hidden financial families turn the events of history into fortunes so massive that their shadows still shape the world today? Every rise and fall, every war and revolution, every crisis and collapse, someone was always counting the profits while everyone else counted the losses. Wealth Rewind opens the door to the past not for nostalgia, but for exposure, because history is not just stories of kings and kingdoms. It is the biggest financial playbook ever written. Every empire that ever existed, Roman, British, Dutch, Ottoman, American, followed the same silent blueprint: control resources, influence money, weaponize information, and turn chaos into opportunity. And the strange thing is, the more you rewind history, the more you see the same hands manipulating the wheels of fate. Gold rushes built cities overnight, while unknown bankers bought land for pennies before the boom even began. Wars that destroyed nations created billion-dollar families who supplied weapons, oil, transport, and credit to both sides. When the world panicked, they invested. When the world celebrated, they sold. When ordinary people followed the headlines, they followed the money. Every collapse had a beneficiary, every crisis had an architect, and every revolution left behind a financial winner who wrote the next chapter of power. In the shadows of these events, a financial elite quietly learned the most important law of wealth: money is not created in times of peace, it is multiplied in times of turbulence. The biggest fortunes were built not from stability but from storms. The Rothschilds used information speed to build a banking empire during Europe's wars. The Carnegies and Rockefellers turned industrial chaos into corporate dynasties. The East India Company used trade monopolies to drain entire regions of their wealth. Private bankers transformed global debt into generational power. And while the masses saw only chaos, these families saw cycles. Predictable, repeatable cycles that transformed history into the world's most profitable business model. Every decade, the pattern repeats. A bubble inflates, a crisis begins, markets crash, currencies weaken, governments borrow, people panic. And someone steps in to buy the world for cheap. The same blueprint that once built ancient empires now builds modern corporations, hedge funds, and global institutions. History does not repeat by accident. It repeats because the same rules still govern money and power. And the truth is simple: the person who understands history doesn't predict the future, they prepare for it. Wealth Rewind uncovers how money moved behind the scenes, how decisions made centuries ago still shape modern markets, and how today's financial events are often old stories wearing new faces. From forgotten kings to silent financiers, from collapsing empires to rising superpowers, the trail of wealth is clear. You just have to look backward to understand what is coming next. Because in the end, history is not the past, history is profit, and the ones who rewound it, studied it, and decoded it became the masters of money the world still follows without realizing it. History becomes a mirror when you look closely enough, revealing that the rise of great fortunes was never accidental, never random, never the result of simple luck or ambition. It was always tied to events that shaped the world, events that seemed catastrophic for the masses, but were quietly turned into pathways of power by a select few. When kingdoms rose, there were families positioned behind the throne, benefiting from every treaty, trade route, and resource extracted from conquered lands. When kingdoms collapsed, those same families shifted their alliances, bought land for fractions of its value, and financed the rebuilding process that put nations back on their feet in exchange for long-term control. This pattern repeats so consistently through history that it becomes impossible to ignore. Major global events are not just turning points in politics or culture. They are turning points in wealth distribution, creating openings for those who understand the mechanics behind them. Every empire that left its mark did so with the assistance of a financial backbone, and that backbone was almost always controlled by individuals who understood the flow of money better than the rulers they served. The Roman Empire expanded through roads, legions, and taxes, but behind it stood merchants and financiers who understood how to turn conquered territories into economic engines. The British Empire rose on trade ships, colonies, and global markets. Yet behind those ships were private companies and banking families who transformed imperial ambition into personal fortune. The Dutch Golden Age was celebrated as a period of art and exploration, but its true engine was the world's first stock market, and a network of investors who saw global events not as stories, but as investments. Every time the world shifted, someone had already planned how to profit from the outcome. The deeper you rewind history, the clearer the invisible architecture of wealth becomes. Events that appeared disconnected on the surface, war, exploration, collapse, innovation, are all tied together by a consistent pattern. Someone positioned themselves to benefit from change. They understood that power did not lie in swords, crowns, or armies alone, but in the ability to control the financial arteries that kept empires alive. They anticipated movements, leveraged information that common people never received, and used every upheaval as a stepping stone for greater influence. These were the early architects of generational wealth, and once they learned how history worked, they learned how to shape it. This is why historical events repeat with such familiar rhythm. Not because humanity doesn't learn, but because a small group always learns faster, acts sooner, and sees opportunity where everyone else sees disaster. When kingdoms fell, they acquired land. When currencies collapsed, they accumulated gold. When wars broke out, they supplied both sides. When peace returned, they financed reconstruction. Every era, every continent, every empire shows the same silent fingerprints of families and groups who saw history not as a timeline, but as a financial cycle waiting to be decoded. Crises have always acted as hidden engines of wealth creation, not because they uplift societies, but because they momentarily break the structure of the world and reveal vulnerabilities that only the sharpest minds know how to exploit. When the masses panic, powerful families and strategic investors identify patterns beneath the chaos, patterns they've studied for generations. A war might destroy cities, disrupt economies, and tear apart nations, but to the ones who understand the mechanics of instability, it also creates unprecedented openings. Supply chains collapse, currencies lose stability, governments run out of funding, and people desperately liquidate assets to survive. In these moments, those who are prepared step in with capital, influence, and timing, buying resources and property at fractions of their true value, while everyone else is trying to escape the downturn. They understand that every crisis eventually ends, and when it does, the assets acquired cheaply become the foundation of a new era of wealth. Wars have historically been some of the greatest wealth accelerators. While soldiers fight on the battlefield and citizens endure suffering, companies that provide weapons, food, medical equipment, transportation, fuel, and logistics profit on a scale that ordinary people cannot fathom. Families like the Rothschilds used the Napoleonic Wars to expand their banking empire by financing governments who could not afford to fight without external credit. The same dynamic repeated in World War I and Tulliu as industrial families created fortunes by producing weapons, ships, vehicles, and essential wartime materials. These were not accidental profits but calculated positions. Those who understood that nations always spend more during war than peace positioned themselves to supply everything the conflict demanded. It was not ideology they followed but opportunity. The more devastating the war, the larger and more concentrated the profits became for those operating behind the scenes. Economic collapses create another cycle of wealth transfer. When markets crash, the majority lose their savings, their homes, and their financial security. But history shows that crashes do not destroy money, they simply relocate it. Every financial crisis becomes a reset button that shifts wealth from millions of unprepared individuals to a few prepared entities. The Great Depression allowed wealthy families to acquire land, businesses, and industries at a fraction of their prior value. The 2008 financial crisis wiped out middle-class wealth around the world, but hedge funds and private equity groups used the crash to buy real estate, corporations, and distressed assets that later multiplied in value. These patterns reveal a truth the elites have always understood: crisis is not the end of opportunity, but the doorway to a new financial landscape. Even natural disasters, pandemics, and social unrest create environments where wealth shifts dramatically. The COVID-19 pandemic shut down global economies, destroyed small businesses, and forced millions into unemployment. Yet it also produced some of the fastest growing corporate profits in history. Companies positioned in technology, logistics, pharmaceuticals, and digital finance expanded more in 2 years than they had in the previous decade. Meanwhile, governments took on enormous debt to stabilize collapsing economies, and the lenders behind that debt quietly secured long-term leverage over entire nations. Once again, crisis created a funnel through which wealth flowed upward. Throughout history, the same families and institutions grew richer not by avoiding chaos but by mastering it. They learned to see crisis as a predictable cycle, not a random disaster. They studied the psychology of fear and understood that during panic, people make desperate decisions that separate them from their assets and security. They knew that governments become vulnerable during emergencies and rely heavily on private capital, allowing financiers and industrialists to set terms that would shape national economies for generations. They understood that when ordinary citizens exit markets in fear, smart money enters with precision. In every century, every culture, and every major collapse, the ones who gained the most were the ones who anticipated that instability is inevitable and prepared to act the moment it arrived. Throughout history, a hidden financial elite has operated with a level of clarity and precision that separates them from the rest of society, not because they possess supernatural foresight, but because they understand the mechanics of power that most people never learn to see. They realized early on that true control does not come from ruling over people directly, but from holding influence over the resources, information, and financial systems that entire civilizations depend on. Kings, presidents, and governments appear to lead nations, yet they constantly rely on those who finance their ambitions, supply their economies, and manage their debts. This silent group learned how to position themselves at the core of every major economic artery, ensuring that no policy war or economic shift could unfold without passing through their hands. Their strength lies not in visibility but in their invisibility, moving behind the scenes while nations and empires take the spotlight. They mastered the art of controlling resources long before globalization existed, understanding that whoever controls raw materials controls industries, and whoever controls industries controls nations. Families that own mines, oil fields, plantations, shipping routes, and manufacturing hubs quietly accumulated more influence than many rulers. Their power was not loud but structural, woven into the economic foundations of societies. When empires expanded, these elites secured the contracts. When empires collapsed, they secured the assets left behind. They learned that while rulers change, the demand for resources never disappears, making resource control one of the most reliable paths to long-term dominance. Information became their second pillar of power. Long before modern communication existed, these elites built networks of couriers, traders, diplomats, and insiders who provided intelligence faster than governments. They knew market shifts, political outcomes, and military decisions before the public did, giving them the ability to act decisively while others reacted blindly. During wartime, accurate information about battles and treaties meant enormous financial advantage. During periods of economic uncertainty, information about currency movement or government planning allowed them to protect and multiply their wealth, while ordinary people suffered losses. Controlling information meant controlling the timing of every financial decision, and timing has always been the determining factor between fortune and failure. Their third pillar was mastery over markets themselves. They understood how to influence credit, debt, interest rates, and investment flows in ways that would tilt economic outcomes in their favor. They knew that governments cannot function without borrowing, and the ones who provide the loans quietly shape national destiny. They learned to manipulate market psychology, using fear to lower prices and optimism to raise them. They saw patterns that others called unpredictable. They recognized that markets, at their core, are reflections of human behavior, and human behavior follows patterns as old as civilization itself. By mastering these patterns, they turned instability into strategy, ensuring that no crisis ever passed without delivering them an advantage. Over centuries, this combination of resource control, information speed, and financial mastery allowed the hidden elite to rise above the cycles that shaped ordinary lives. While nations rose and fell, they remained, adapting and expanding their influence across continents and eras. Their power came not from ruling the world directly, but from shaping the conditions in which the world operates. ensuring that every shift in history, whether peaceful or catastrophic, ultimately strengthened their position.